ahead of the curve.
Hello and welcome. You're watching First Stick here on News 9. I am Suyash Maheshwari and with me in the studio is Amit Ranjan. Now we have got lots to talk about over the next half an hour, but as always, let's take a look at how the global markets are placed this morning. Amit, over to you.
Good morning, Suyash. It was the Taiwan semiconductor manufacturing company that fueled hopes of a global recovery in the sector that notched up the tech-heavy Nasdaq almost 1.4% yesterday in the positive. Dow Jones closed in the positive at 0.54%. Apple was the biggest gainer. It notched its biggest daily gain of 3.36% since May last year, and that drove the S&P 500 and the Dow Jones. The S&P 500 closed at 0.9% in the positive almost yesterday. Coming to the European markets, they were in the positive as well. The stock 600 closed in the positive at 0.59%. Hang Seng was also in the green this morning coming to the Asian markets, but it slipped into the red. It was at hovering at 0.24% in the negative. Nikkei is still in the positive at 1.34% this morning as of today.
And as far as the global equities look, it looks like we are witnessing some bit of a bounce back. But you know, the overall cues, not much movement there as far as the dollar index and the 10-year US bond yields are concerned on a day-to-day basis. However, they are still at their recent peaks. You know, the DXY, the dollar index, is up marginally overnight and is hovering somewhere around the 103.4 mark. And the US 10-year has picked up by about 3 basis points overnight and was last seen somewhere around the 4.14% mark. Oil prices too have moved little on Friday's trade, and but you know, we are witnessing some bit of a gains for the week as optimistic demand forecasts and output disruptions in the US has helped offset fears of slowing economic growth and high interest rate. Brent crude is trading just below the $79 a barrel mark. So overall, a very positive setup for the Indian markets as well, because you know, equities are rallying and there is not much movement on the dollar index and on the bond yields, which could you know, downplay the our gains. And as a result, you know, back home after a 3-day sharp correction, Indian markets actually witnessed a gap up opening with Nifty kicking off the session above the 21,600 mark, and this was on the back of, as I mentioned, a positive global market as well as a bounce back that we are witnessing in the banking sector, which, remember, had been reeling under pressure in the last 2 sessions after HDFC Bank declared its Q3 numbers. But you know, coming back to today, it's a sea of green out there. You know, Nifty as we speak is up almost 1%, and you know, we are building on to the morning gains. We are actually at the day's high, and Nifty as of 9:30 AM was trading 0.92% higher above the 21,650 mark. Sensex is also showing significant strength, and the index is now above the 71,700 mark. Mid cap and the small cap space, you know, they were largely volatile yesterday, but you know, ended near the day's high. So we are witnessing a build up and a pullback in the broader markets. The mid cap 100 index is up 0.82% as of 9:30 AM, and the small cap index is sitting above the 15,500 mark. And I think, Amit, what's good to see as well is a slip in volatility. India VIX, remember, just 2 days back we were talking about how that moved past the 15 mark. Now we are not just below 14, but you know, we are hovering just above the 13.5 sort of levels on India VIX. So a good decline in volatility, which pretty much indicates that there won't be as much as toppiness that we had been witnessing in the past 2-3 sessions. But let's also bring on board Mr. Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial. Akshay, thank you for joining us here on News 9. Now, you know, Nifty today opened gap up, and that was after a sharp correction that we had witnessed in the previous 2 sessions. But the question really is it just a dead cat sort of a bounce back, or can you expect the pullback to continue?
Good morning, Suyash. Well, if you look at the broader chart structure, you know, the data points which are emerging in the last few trading sessions,
Seem to have lost it.
They
I
are
think
not very optimistic. The list has slipped down below 50%. We started around 67% as the January series opened. Also, there are a lot of shorting bets which are pretty evident in the futures and option space. And this is the bounce which we have seen since yesterday, which came from around 21,400 odd levels, is just a dead cat bounce. That's the theory, I believe. This support is there to hold, but for the short term, there's going to be volatility for the coming week. You have the expiry, you have the budget coming up, and these things will keep the market on a slippery footing. But overall, if you were to see from the chart perspective, I would wait for the market to settle about 21850, that is basis spot Nifty. That would give me the comfort that things are really stabilizing. Otherwise, around 700, 700, 750, you can see another round of selling pressure getting back into the markets again.
all right, and Nifty Bank has also seen a pullback this morning. The index is up somewhere around 0.8% as we speak. But for the whole week, it is still under tremendous pressure. In fact, it's down about 3.5%, one of its worst weekly performances in the last 1 year. What's your view there overall? The numbers of IndusInd Bank came out, and I think that will provide some comfort that as far as NIMs are concerned. And could that potentially lead to further upside?
Well, Bank Nifty today is the first day where we have seen some good gains in the opening trade, but really, the party for Bank Nifty was spoiled by HDFC Bank, as I understand. That was the Bank Nifty took the biggest dent after HDFC Bank reported its numbers, and there was some serious selling in that counter. As I see Bank Nifty, 47,000 is a positional resistance. If you are a short-term trader, yes, we are trading right now around the level of 46,300, 350 where we are. We are not out of the woods again, I may say, for Bank Nifty too. Things would be choppy because State Bank will come to support. PSU Bank still have that strength. Bank of Baroda, Canara Bank. You have Axis and ICICI from the private banking space, which are giving support. IndusInd Bank, which you mentioned, results are good, but the reaction to the results have been a bit tepid, a bit slow, not able to sustain about the 1600 odd mark. IndusInd Bank. So yes, volatility would be the essence. Still not the right price point to go aggressively long on Bank Nifty. There is scope for slipping back to 45,500 from where the bounce back came. So I would not be very much comfortable taking an aggressive buying bet in Bank Nifty. I would wait for the resistance of 47,000 to break or stabilize. That's still far away to go for any meaningful recovery in the banking index.
All right, and talking about IndusInd Bank, interestingly, the bank, despite a healthy set of numbers for the December quarter, slipped about 2% in the morning trade. In fact, at one point, I was looking at the chart, it was the only stock in the Nifty 50 basket that was in the red. What's leading to this price pressure? Because the stock clearly has been an outperformer in that private banking space, where a lot of these stocks have given somewhere between minus 5% to 15% returns. IndusInd Bank over the last 1 year has given returns of about 30-35%.
Yeah, absolutely, Suyash. On the face of the numbers, there is not much of a negativity as I see, but if you see the opening reaction, as the data read yesterday, 1600 in options was a very good support base, which the put writers had defined. Since the opening trades now post the results, the reaction is that the put writers are shying away or exiting the writing bets. That's not a good sign as far as day trading goes. Call writers are slowly piling up at the levels of 1600 in the writing space. So yes, I believe some pain might be on. The market is not giving a thumbs up reaction to IndusInd Bank results. The support which possibly as a trader you want to see now is the moving average support. 50-day moving average roughly works out to 1550. That's the day trading support which this bank might head to. So stay away from buying right now. Let the prices at least stabilize above 1600. That's the first sense which I derive. That would be the first hint that there can be some buying recovery in IndusInd Bank.
Good morning, Akshay. I'll drive your attention to an industry where analysts are expecting more than double the profits in the Q3 results, and that's the tire industry, and specifically MRF, which breached the 1.5 lakh per share mark just few days ago. It's hovering around 1,38,000 right now. Compared, and in the last 1 year, MRF has grown 54%. Its peers, CET, has grown 57% in the last 1 year. Balakrishna Industries, of course, only 17%. How does one approach MRF, or should the new investors go for lesser price stocks like Balakrishna Industries and CET, which are 2,500 abouts, or it is still good to go into MRF, which is at 1,39,000 around right now?
Good morning, Amit. Well, if you look at MRF, yes, a very high priced, counter in terms of the value it holds. So really, the retail investors do not get comfort looking at the prices itself. But if you look at the broader chart structure, the structure is very strong. In fact, the entire structure has been buzzing. You name it, Apollo Tires, JK Tire, all these stocks from the tire space have been buzzing in the last few trading sessions, irrespective of what is happening in the indices. Here, MRF Tires has seen a very strong volume action a couple of days back. This was around 1,35,000 price level. So that's the price point where I believe there was an actionable. Chart structure is still strong, highly overbought. So not a suitable buy point if you are trading the stock. I would say that if you are holding on to it, yes, there is no reason why you need to fear. The overbought is just a matter of time for short term. I believe the targets of 1,50,000, which was the spike which we saw a couple of days back, that might be the target area you want to relook at. Support area is 1,32,250. So keep a trailing stop loss now. If you have MRF with you, if it is there in your portfolio, there is no still reversal signs. If as a new investor you are searching for tire stocks, then I believe JK Tire is the better bet here, considering the fact that, although this too stock is at its lifetime high level, the promise or the potential of the stock ballooning or giving you significant returns as an investment holds more promise over MRF. That's what the charts have to say.
Okay, Akshay, apart from this, what do you suggest or advise for our investors today?
Well, I have a couple of trade recommendations. The markets have been on a slippery footing in the last trading sessions. And clearly one sector which has come out in all this mayhem is the pharma space. The buying again, momentum is slowly gathering up in most of the pharma and the healthcare names. So here I have a couple of pharma names which I would recommend to the viewers. One would be Lupin and the other would be Cipla. So Cipla, a very strong breakout which has been noted on the charts a few trading sessions back. Supports revisited, again fresh momentum entering into the counter. This can easily target around 1362 on the upside. 1379 can be your extended targets. Keep a stop loss of 1297. Lupin is one more stock you can consider here. Again, a very strong chart structure. Yesterday we did see a breakout. Today the momentum is somewhere missing, but I believe it will catch up. So short term, keep a target of 1467, stop loss 1397. And Tata Motors, a bit of a flavor which is different from pharma but from the auto space, which yesterday obviously did see some momentum pick up. A very strong chart structure, nothing to do with what the indices are doing, because the Nifty corrected but Tata Motors somewhere held its ground, was not disturbed at all in what was happening in the market. I believe still there is more momentum to go right up till around 862 to 872 on the upside as a trading bet. Keep a stop loss of 797 as a risk management in this trade.
All right, those are the stock recommendations from Akshay Bhagwat. Lupin, Cipla look attractive from the pharma space, and Tata Motors is another bet that you can take for the short term. Sir, always a pleasure speaking to you. Thank you for joining us here on News 9.
Thank you.
But with that, let's take a short break. On the other side, we'll be joined by Mr. Devang Mehta of Spark Private Wealth. So keep watching News 9.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
$392 pillars, 44 doors. Prime Minister prays ahead of the big moment. Special rituals in Ayodhya. All eyes on Ram Lala.
पूरी दुनिया उत्सुकता के साथ 22 जनवरी के ऐतिहासिक क्षण का इंतजार कर रही है.
Pran Pratishtha. Rolling coverage. Only on News 9 Live.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There's certainly a wall of capital coming into the clean tech, climate tech space, not just in India but across the world.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
Ram's Ayodhya rebuilt. Ram Lala's Pran Pratishtha. Countdown to January 22nd. Dateline Ayodhya. Catch the mega coverage only on News 9 Live.
Welcome back. You are with us on First Take. Suyash Maheshwari continues to be with me in the studio. After 3 straight sessions of bloodbath on markets, there is some upward momentum finally, Suyash. Both Sensex, Nifty up 0.8%, 1% uptick in all major indices, IT, metals, that and banking, of course, that continues to be the focus. Run us through a quick look at the markets before we move to our guests.
Surely, Shweta, and it has been a very interesting past few days. If you put things into context, last Thursday and Friday, we saw a rally of about 500 points on Nifty, and from there on, we saw a pullback of about 600 points. So essentially, whatever we gained after the results of IT, we have lost all of that. But today we are seeing a good bit of a bounce back. In fact, Nifty opened gap up, and it has been building onto that morning momentum. And Nifty currently, as you can see on your screen, is still hovering above the 21,600 mark. In fact, it's very close to its day's high. Sensex is also just under the 71,800 levels. And the broader markets, Shweta, specifically, let's talk about that, because during the times of volatility and market correction, they are the ones to witness a fall, from the levels. But we saw a good bit of a bounce back build up in the latter half of yesterday's session, where the both indices managed to end near the day's high. And in fact, they are trading, with significant gains this morning as well. Both indices are up somewhere around 1% or so. Nifty small cap has reclaimed 15,500 mark, which, by the way, the index had slipped below the 15,000 levels for the very first time yesterday in over a month. But we have bounced back from the lows of yesterday. The mid cap index is also back above the 47,000 mark. In fact, it's moving towards the 47,500 sort of levels. And I think what the market would really appreciate is a fall in volatility. India VIX had slowly moved towards that 15 levels, but we have in the last couple of sessions we have declined not only below 14, but we were somewhere around the 13 mark in early trade. Currently we are seeing a little bit of a pickup in volatility once again, and we are near that 13.86 mark. But the question really is this a pullback that the market was hoping for, or is it just a dead cat rally which does not really have legs to it?
All right, let's take that question to Devang. In fact, Devang, very good to have you back on the show, sir. Thank you very much for taking time out and for joining us here on News 9. I think, staying on with what Suyash was asking, after 3 straight sessions of a bloodbath that we saw on markets, there is some sort of a rally that we are seeing as of this morning. In fact, Nifty at 21,600, crucial support level. What are the support levels going forward? If one were to read into the markets any better than what's happening as of this morning, what are the near-term crucial support levels that you're looking at?
Thanks, Shweta, for having me on the show. Honestly, I am not a technical analyst. I look at fundamentals, so I wouldn't be able to comment anything about the support levels as such.
Okay, but then I also want to talk about specifically, banking and IT pack, because that has been in the focus for the last 3 days, sir. Are you looking at some sort of turnaround as of today? What is your near-term outlook on both banking and IT stocks?
Yeah, so I think IT came up with a good set of numbers. In fact, the street was expecting a bit of a turmoil to continue in the IT numbers, but yes, it positively surprised the street. Some of the numbers, some of the guidance, some companies even expanded their margins, and I think in dollar terms also, a lot of these companies delivered good numbers. Plus, the guidance was also not weak. And we also know that the better part of the global world is now going to sort of see a bit of improvement over the last year. So I think, yes, IT was becoming sort of a contraband for us as well. It's worked very well, and I guess from here on, large cap IT and even some mid cap IT came up with a good set of numbers. So my sense is that this is one business which was this was one stream of business which didn't get that sort of a valuation over the last couple of years, but it seems to be coming back with a good bit of traction. Banking, yes, on the other side, yes, banking, we know that HDFC Bank sort of disappointed the street after a long time with its integration with HDFC. I think it seems to be on track, but yes, it has sort of disappointed the street in terms of it trading at a premium valuation. And when you trade at a premium valuation and there is a bit of slippage in terms of your numbers, I think that also reflects. So the sense one gets here is that can't sort of dissect this trend for the overall other banks. But I think what is more important is that PSU banks have shown relative bit of strength. There is a lot of correction which has happened on the banking side. It seems to be very interesting, not commenting on a specific stock. But after this correction, I think probably this is one sector which still is on a price to adjusted book value, a bit undervalued than other sectors. So yes, it's getting interesting. Probably a little bit of more correction and people would start buying banks and NBFC banking.
All right, hi sir, Suyash here. Now, in the last 2 sessions, FIIs, foreign institutional investors, they have pulled out nearly 20,000 crore worth of equities from the Indian markets. In fact, they're not just selling in India, but other emerging markets as well. What's causing the sell-off?
Yeah, excellent question, Suyash. So I think, yes, roughly around $2.5 billion selling in the Indian markets. And of course, we know that they've sold across in other Taiwan, Korea, other markets as well. I think a couple of days back, the data points which US again pointed, there was a sharp correction in US markets as well, 2-3 days back. And then I think the dollar had strengthened, yields again sort of shot up. And there is now a belief that people were talking about the rate cut in US in March that has sort of got delayed. The commentary over the last 2-3 days from different participants of Fed have shown that yes, inflation is still persistent. It's not as easy as the markets and the market participants were rather thinking about. The sense one gets is, yes, the globally again a bit of volatility has started to creep in the proceedings, and that has impacted the FII behavior. Ideally, what I would also make a note of is that earlier, if this $2.5 billion of selling in India would have transpired maybe 3, 4, 5 years back, there would have been sort of a correction of the tune of 10%, 12%, 15% on the indices. But right now, the power of the Indian retail or the power of Indian investors, be it domestic institutional investors or whosoever, I think that's extremely heartening to see that the market's not cracking. Yes, we saw a good bit of correction, but at this levels, after a fast and a furious rally, you can expect a correction of 5-7% probably any day. But it's not carnage as what we would have expected 5 years back.
All right, so perhaps more resilience there as far as Indian markets is concerned. So, given that geopolitical tensions are once again simmering, not just in the Middle East, but looks like globally demand is muted at this point. What sort of momentum are you going to see as far as Indian markets is concerned? Any negative surprises that you're factoring in at this point, apart from what we already know is happening when it comes to crude, when it comes to situation that is panning out, not just in Ukraine, but also with our borders with Pakistan and Iran?
Yeah, so I think, yes, one thing is important that this is going to be an eventful year. It's not going to be a year where it will be only smooth sailing. I guess why? Because there are events lined up. There is a vote on account or a mini budget that is going to come on the 1st of February. There are general elections in India. There are elections in US. Yes, there is a talk about how the interest rates and hence inflation and hence the interest rates, the trajectory of interest rates across the globe, be it the developed markets, be it the emerging markets. You talked about crude, which is an important moving part for India as well. We talked about geopolitical tensions, be it Russia, Ukraine, be it Iran, Pakistan that we are talking about, and these are unknown events. These are Six Sigma events which probably you can't plan for. So yes, there are a lot of events lined up this year. Of course, most importantly, what the markets in India will follow is the earnings cycle. The earnings probably are going to do very well for the next 2-3 foreseeable years. Capex has come back, discretionary consumption is robust, credit growth is good. So the sense one gets is, yes, you can't get the best of everything. But yes, honestly, India seems to be a bit of oasis in the desert, if I can put that word.
Now, Mr. Mehta, talking about quantitative easing by US Federal Reserve, just back in December of 2023, the markets were celebrating and hoping for a pivot because that's what the commentary coming out from the Fed was. But since then, a lot of the Fed members have pushed back and, they are pretty much saying that the rate cut would happen eventually, but probably at the latter half of 2024. What is your expectation as a group? By how much quantity can we expect the rate cut, and when will it eventually begin?
Yeah, we sort of we were expecting it to be sooner than later. But as you rightly said, the data points now again pinpoint that yields have started to short up, dollar has strengthened. There is also a narrative and the commentary from the Fed members that it's not as easy that you consider. So, for example, there's a meeting on January 31st, which everybody knows would be more a status quo. Probably March also would be a status quo. That's what the feeling. See, it's as a set of news which is continuously flowing. It's a continual news flow that will emerge out of US. They'll look at the retail sales data. They'll look at the inflation data, the home sales data. I think all these are moving parts which probably you can't predict. But yes, markets were expecting sooner than later. But if it also going to happen probably post-June, then also market will take it positively, because the trajectory right now is what? It's clear that it was higher for longer. It does not seem like that now. It seems that yes, it's peaked off, and from there it is going to sort of come down. When is again a question which I think it's a answer that we'll probably get in the next quarter.
All right, answer probably in the next quarter. But, I want to specifically take a minute to talk about crude prices, because crude prices volatility is also something that we've noted here. It closed about 1.6% higher yesterday, seeing some sort of positive trajectory, upward movement as of this morning. And all of this on the back of the fact that China will show some demand or will not show some demand. What sort of trajectory are we expecting for crude going forward?
I think crude, exactly, if you want to sort of take a call, it does not come and set India till around, say, 90, 95. We saw in the shorter term, in the past 3-4 months, crude coming and acting as a spoil sport and going to again that 88, 90 levels, and then probably from there had come back again to 70, 75 sort of levels. From there again, it is sort of started to again creep up. The sense one gets is that India is, of course, we know that we are commodity importers, we are crude importers, we sort of take 80% of our crude from outside, but mostly what the government has done very well is when the crude prices were low, I think they didn't reduce the fuel prices earlier, and the excise also is helping us. The word fiscal deficit, current account deficit are all under control. So I'm not feeling as bad as it could be. Yes, it going above 9500 and staying there for a longer while will upset the raw material cost for a lot of companies, as we are commodity consumers. So that's where the equation gets spoiled. But otherwise, yes, trading around say 70, 75, 80, 85, I think wouldn't make much of a difference right now, as the sentiment is towards equity is also good, and the earnings of the companies are also good, and people also have inventories at lower levels as well.
All right, Mr. Mehta, and the last question from me. China's economy has witnessed one of its worst GDP growth, at least in the last 1 year, and the overall the economy has been grappling with issues such as the property crisis, the global turmoil, as well as sluggish consumption, and the markets also have taken a beating. So, from a valuation standpoint as well as a FII standpoint, is China now more attractive than India?
I think this is the classic argument, Suyash, that we have been hearing for the past couple of quarters, that is China cheaper than India in terms of valuation? Yes, it is. It is probably trades around, say, 10 times the price to earnings, or even on a price to book value basis. It's quite cheap than what India is trading. Now, you need to understand that whether the foreign institutional investors, the foreign portfolio investors want a hub of growth or probably a medium-term safety. I think one thing is very clear, that India will remain a sort of a biggest growth trajectory engine for at least the next 2-3 foreseeable years. India is at the top of the spreadsheet, if you ask me, for a lot of foreign investors, and also for a lot of investors based out of India, where they want to invest in Indian businesses and good Indian themes. China, again, to be very fair, I think it had sort of lost its charm in the last couple of years. Also, if I can make that point, that MSCI index, where MSCI index, where again India is getting creeping into the stake which China had. China's stake is continuously reducing. So my sense is that people will invest more in India. Whenever the flows start towards the emerging markets, India will be the recipient of largest flows, and China would probably be the second or third in if I can put it in that order.
All right, India will still remain a priority. That's the word coming in from Devang Mehta. So always a pleasure speaking to you. Thank you very much for taking time out. And with that, it's a wrap on First Take. We'll be back with Business Plus in just a bit.
$392 pillars, 44 doors. Prime Minister prays ahead of the big moment.